Good afternoon, it's Christian Thwaites from Brian Janikowski, Friday, February the 19th. Well, it was a short week in the markets. We had Monday off, and also all of last week China was closed for the New Year. So this week was a bit about catching up, and it was generally good news. The S&P was up about 4%, the small cap index here in the US up about 5%, and the large cap international markets also up about 4%. So this brings the S&P up about 6% from its lows just a couple of weeks ago, and down 6% on the year. Remember, it was down as much as 11%, so slightly better news. Why? Well, first of all, the Fed came out with some quite dovish comments, not only from its minutes, but also legacy from the prior week's testimony in front of Congress. And a couple of Fed presidents came out and basically said that they didn't think rates needed to increase at any time soon, and this from one particular hawkish governor from the St. Louis Fed. So that was better, and also the economy was slightly better, particularly industrial production news. Nothing great to write home about, but certainly better than most would have expected. I want to show you a quick chart on negative interest rates. You might have heard a lot about this. This shows that all of the major central banks are very close to zero, or if not below. I would say a couple of quick points on negative interest rates. Firstly, it is interest rate policy. It doesn't mean that savings and bank interest accounts in these countries are going negative. Secondly, it does tend to increase the value of the currency rather counterintuitively, but that's certainly what's happened in Japan recently. So I think that they're finding it's not necessarily a good tool for central banks to use. But overall, whenever you have this negative interest rate type of environment, it's very unusual for this to happen. Last time it happened anywhere significantly was in the 1970s. It's really a concern about growth, and that's really what we're facing in the early parts of this year. Until this is sorted out, markets are still going to be fairly nervous about the direction of the economy and underlying earnings. Thank you very much.